Welcome back, listeners. My name is Larry Colvig, founder and CEO of the Haven Financial Group. And if you're just tuning in, you're listening to the Haven Financial Group radio show, where every week we come to you discussing crucial retirement discussions, topics, some fun, some not so much fun. So again, thanks for listening. Feel free to give us a call, 612-504-8400, or online at havenfinancialgroup.com. Shoot us an email at info@havenfinancialgroup.com with any questions, or simply just say, I want to come in and have that no cost consultation. And, you know, Kim, it's good to be on our regular time slot this week, as we've been bumped by those Minnesota Vikings the last 2 weeks. 1-1. I guess at least we got one of the wins. So again, back in our normal time slot. And again, listeners, thanks for listening.
We're talking about family strategies for retirement and how your personal strategies might impact your family. And we want to talk a little bit about taxes. A lot of people believe in retirement they'll pay less tax. That's not necessarily the case. In fact, Larry has said that frequently that is not the case. So being prepared for the tax ramifications of retirement is very important. But as we mentioned a few minutes ago, it also can be very important to your family. So let's begin, Larry. I just hit on it a little bit, but I'd rather you, the expert, talk about it. When you're in retirement, you're not necessarily paying fewer taxes, at least not in the beginning.
No. Oftentimes people will pay more taxes in retirement. I know that's not uplifting and what listeners want to hear, but it oftentimes is the case. When you turn Social Security on, required minimum distributions is really where it hits home. Wow, Larry, we make more money now than we did when we were working. In fact, I just had a conversation this week in our planning process with this couple from Lakeville, and they're right now they're right at 70 years old, and in 3 years they have required minimum distributions, and they don't spend much money now. They've been good planners. They've been very disciplined. Again, a disciplined couple. And I said, are you prepared in 3 years to get a very large income boost? And they go, well, how much is it going to be? And I said about 80 to 100 grand in an income boost because of RMDs, which tells you that they've saved a lot of pre-tax money.
Right.
That's good. But the flip side of that is now more tax potential. So, you know, I say that because it is fourth quarter. Man, it's hard to believe it's fourth quarter, but we're really having the discussions now with everybody about, okay, we have a good idea what your income is this year. Is there anything tax-wise we should be maneuvering to do to maximize the 12% bracket? Is it IRA to Roth conversions? Is it padding your savings account with an IRA distributions? Anything to make sure that we're filling up that 12% ordinary income tax brackets. And you know, this segment is really a lot about income. What are those sources going to be? Mm-hmm. You know, we want to be tax efficient. Is it right to turn your Social Security on now, or does it make sense to delay? That's why we teach these classes. Mm-hmm. Will you have a pension? My wife and I won't have a pension. How do you build your own pension? Self-directed pension can often be used by using an annuity for income. Now, I won't go deep into that, but annuities can be very effective for income if income is a need. Now, problem is, a lot of times people have annuities. They don't know which one of the four they have. They may have the wrong one. And I say that because this past week I reviewed a client's statements. And this couple had plenty. They've done, again, great savers. No debt, too, by the way. That's a good way to go into retirement. No debt. And they had two annuities. And they were designed for income. Yet they're never going to need more income. They have too much income the way it is. So what happens is they got in the wrong ones. They're not getting any growth. And they're designed, different annuities are designed for different types of situations. And for some people, they're not designed at all. So again, if you have an annuity, I call it have an annuity x-ray, annuity exam, just to make sure to have that you have a good understanding of what you have. Just note that not everybody has to have an annuity. It's just one of those things that sometimes people should and sometimes people shouldn't.
Right. When we talk about taxes and people getting into retirement and there may be a little more mobile, a lot of people consider the idea of moving to a tax-free state. What are some of the advantages of doing so and maybe some of the downfalls?
Now, why would you say that as we sit here right in Minnesota, where we're such a tax-friendly state? Listeners know I'm joking. Although I lived in my whole life and probably already will, but I know the temptation, South Dakota, Arizona, Florida, Carolinas, all those, I hear it weekly. I say just make sure you check out applicable taxes because other states have different types of taxes. So
Hmm.
there is a benefit in some situations, sometimes not as much as people think. But again, let's talk through that because taxes are relevant, yet most people aren't doing any tax planning. They're just getting their taxes prepared. And you may be tax inefficient, and you probably want to be tax efficient. So at the end of the day, again, forward-thinking tax planning leads to successful tax preparation. The tax preparation has all been drop-off pickup these days. And as we talked last week with Lance, our CPA, he loves to explain things and he loves to go through these things. So again, are you getting the attention in the tax discussion or are you not?
Hmm. Let's talk a little bit about investments and maybe reassessing investments in retirement to make them more tax efficient.
Yeah, what I'll say to that is oftentimes we see in the investment team here at Haven, we see a lot of folks have the wrong types of investments in the wrong types of accounts. So when I say types, IRAs, Roth IRAs, and non-qualified brokerage accounts. When you move money around or rebalance, which people should be doing, problem is a lot of people aren't because they're not paying attention to their investments, which is what we do as a wealth management company is rebalance, making sure we're in the right positions. But inside of an IRA or Roth IRA, when you're making moves, doesn't really have any effect. But outside of that, in a non-qualified brokerage account, there are tax ramifications, potentially long-term capital gains. We also do tax loss harvesting to start minimize taxes as well, and many people aren't doing that. So you can use volatile times for the good if you're doing it. The problem is most people don't know how to do that. So you're right. The wrong types of investments and the wrong types of accounts also creates inefficiencies. And at the end of the day, it's your money. What you choose to do is up to you. But when I say a lot of people are unaware of what they're doing, they are. They don't know how much risk they're taking. And risk is another assessment that we do quite often. I say defense wins championships. Now, we're not against offense, but as you get closer to retirement, you may want to take the foot off the gas pedal a little bit.
Sure.
And oftentimes people just they don't know how much risk they're taking until something bad happens.
Right. Until the risk becomes reality. All the things you're saying, by the way, Larry, just reasons why, even if you already have a portfolio, if you already have a a retirement plan, sometimes it just needs to be reviewed. You need another set of eyes, someone else to take a look, sort of reason through and discuss what you're planning and what your intention was when you drew that up, and maybe if that planning and your intentions have changed now. I really quickly here want to just have you address the issue of Social Security. We talk a lot about, maximizing Social Security, and that's based a lot of times on when you draw it. But I don't know if people realize that Social Security can at times be taxed.
Oh, it absolutely can be taxed. It's a progressive tax. Depending on how much you have, and we won't go deep into that. Some people have none of their Social Security taxed. Some of people, you can have up to 50% of it taxed, or up to 85% of it can be taxed. It's a progressive tax. So definitely we want to have the tax discussion as it relates to that. One thing I want to add is what I've seen a lot more in recent years is the idea that you don't jump into full retirement, but partial retirement. Easing into it. Again, maybe getting part-time work, contracting or consulting work. I see this quite often. Delta, during COVID, Delta supported us to some degree unknowingly because we had a lot of outspoken clients that were Delta retirees. They were offered a lot of packages during the pandemic, and as an essential business, we helped a lot of Delta employees that retired make good retirement decisions. And again, a lot of cuts there. Well, then now all of a sudden the pandemic's gone, and a lot of these people, they've elected to have them come back as consultants. And I'll tell you, it's served its purpose for a lot of our clients because it gives a little bit of income. It gives a little bit more of a cushion to the retirement dollars. So, don't rule out working at all, but it's better to not have to work rather than forced to work because the money situation isn't good. So again, we like to explore all the options, have all the discussions to make sure we're doing the best we possibly can in all of these areas.
So if you'd like to have that discussion, let me give you the telephone number. It's 612-504-8400, 612-504-8400. Reach out to the folks at Haven Financial Group. Tell them you heard us here and you'd like to come in and talk with them about your portfolio. We'll get you an appointment. There's no charge. It is free. You just come in and sit down and chat and make the decision as to whether the folks at Haven are a good fit for you and vice versa. Again, it's 612-504-8400. Coming up next, we're going to talk about selling your home. That can sometimes be an option in retirement. Maybe you want to downsize. Maybe you have saved money inside your home and you'd like to, realize that money as you head into retirement. All kinds of reasons, but there's all kinds of things to consider. That's coming up next on the Haven Financial Group Radio Show.